Looking for clean GBP USD technical analysis today? Wondering why is GBP USD dropping despite hawkish BOE rhetoric? Searching for cable support and resistance levels you can actually trade? Right now, the pound is giving you a masterclass in deception. Price is falling hard on the 1 hour, 5 hour, even the weekly. But pull up your monthly chart and it's still screaming buy. And that's the trap. The herd is anchored to that monthly story, and they're buying this dip like it's a gift. Meanwhile, the dollar is crushing everything, oil is spiking fear into risk assets, and the bow's hawkish shift, completely ignored. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow. I want you to write down this number. The single line that changes everything today is 1.3402. If we get a 4-hour candle close below 1.3402, the entire daily structure resets to a bearish breakout, and the monthly buyers are in serious trouble. That's not a dip, it's a liquidation event. Right now cable is at 1.3417. Look at the session bias. We are in a straight line fade. Hourly trend strong sell, 5-hour trend strong sell. The daily chart is trying to stay neutral, but it's hanging by a thread. The weekly chart is already in sell mode, and that's the dominant rhythm. The only thing holding the floor together is the monthly buy signal and the 200 period anchors. But here's the micro insight. The herd is positioned long, leaning on that monthly bullishness and betting on a bounce from the 200-day. That positioning is fuel. If 1.3402 breaks, the rush to the exits becomes a self-fulfilling puke. So your bias for today is fading into any strength until proven otherwise. The invalidation that kills the bearish momentum is a 4-hour closeback above 1.3476. Above that, and we have a squeeze on our hands. So write it down. Invalidation level 1.3476. Above there, I'm flat on shorts. Below 1.3402, I'm hunting the next leg lower. Now let's walk through the technicals from the top down, because the moving averages are telling a story most traders are ignoring. Start on the weekly. The 200-week moving average is sitting at 1.3386, and price is racing toward it like a magnet. That's the beast. That's the line that held the entire structure for months, and every time we've approached it before, buyers stepped in with size. But this time it feels different. On the weekly, we have a bearish MACD cross that's barely 3 weeks old, and the moving averages are beginning to fan downward. The 50-week is at 1.3471 and acting like a brick ceiling. The 20-week is crossing below it. That's not a bullish setup. Now drop to the daily. The daily MACD is flat at 0.0000, no momentum at all. That's exhaustion. The 20-day moving average is 1.3460. The 50-day is 1.3471. Price is well below both, so any pop toward 1.3450 to 1.3470 is a sell-on strength opportunity unless the dollar suddenly rolls over. The 100-day is at 1.3451. The short-term moving averages, the 5 and the 10, are at 1.3442 and 1.3447. Price is even below those. That means we are trading below every single key daily moving average except the 200-day, which sits down at 1.3386, right near that weekly anchor. That's a classic bearish configuration. The RSI on the daily is 45, not yet oversold, so there's room to run lower before any mean reversion becomes urgent. Stochastic at 56.85 is trending down from the mid-range. No hidden bullish divergence. No reason to blindly buy here. Here's what most traders miss. They look at the daily and think neutral, I'll wait. But the 4-hour chart is screaming a different message. On the 4H, we have a persistent bearish structure with lower highs and lower lows. The 4H MACD is showing a hidden negative divergence. Price made a marginal new low, but momentum is not recovering with any conviction, suggesting the sell-side pressure is reloading, not exhausting. And the 4H 50-period moving average is sloping sharply lower, crossing under the 100 period. That's the kind of alignment that typically precedes a momentum flush. The 5-hour and 1-hour trends confirm strong sell. Right now on the 60-minute chart, every bounce is being sold into. The 1-hour 20-period moving average is at 1.3442, the 50-period at 1.3450, both angled down. As long as price stays below that 1.3442 to 1.3450 zone, the intraday bears are in total control. The levels are clean. Resistance is 1.3476, then 1.3498, then 1.3513. Support is already breaking. 1.3439 failed to hold. 1.3424 has given way, and we are hovering just above 1.3402. If 1.3402 goes, the next real downside is the 200-day and the weekly anchor at 1.3386. Below that, it's a vacuum. There's air down to 1.3300. So the daily support of 1.3402 is the boundary between a normal corrective dip and a full-blown trend change. Now crosslink this with the broader market. Sterling is not moving in a vacuum. The dollar is on a rampage, and it's being juiced by two things: real yield differentials and a fresh risk-off bid from oil. Yesterday's sharp rebound in crude, over 2%, is acting as a tax on global growth sentiment, and cable is taking the hit because the pound is highly sensitive to risk appetite and energy costs. The 24-hour news flow says it all. Sterling today. Pound slips a stronger dollar. Oil rebound weigh on sentiment. It's not complicated. And the analyst consensus? Pound sterling to US dollar weakness shows the Bow's hawkish shift is not enough. That is the heart of the policy divergence battle. The Bank of England is trying to sound tough, but the market is saying, we don't care. US rates are higher for longer, growth differentials favor the dollar, and oil spikes hurt you more than they hurt the US. Until that narrative shifts, any sterling bounce is a sell. The 1 to 2 week directional lean is bearish, targeting a test of the 1.3386 zone, and if that breaks, 1.3300. The event that invalidates this bearish outlook is a sudden dovish surprise from the Fed, or a weekly closeback above 1.3513. That seems unlikely this week. Do you think cable breaks 1.3402 today? Comment yes or no right now. I'm tracking Consensus Live. The comment section is full of trapped bulls still hoping. Be honest. Most people skip this section. That's exactly where the money is made. Keep watching. I'm about to give you 3 sniper trade setups, exactly how I'm playing this. Every setup comes with an on-screen trade card you can screenshot. No guesswork. Strategy 1, the sniper, conservative. This is for traders who want a high probability reaction off the critical floor. We wait for a 1-hour close below 1.3400. That means a full hourly candle closing under 1.3400, and then an immediate recovery back above 1.3402 within the next 2 hours, forming a false break or spring. The entry is long on the 1-hour closeback above 1.3405, with confirmation from a bullish RSI divergence on the 15-minute chart. Your stop loss goes at 1.3375, just below the 200-day moving average and last week's low, giving the trade room to breathe without being hunted. Take profit 1 is 1.3450, right under the 50-hour and 20-day moving average cluster. That's a 1 to 1.4 risk reward. Take profit 2 is 1.3495, just ahead of the 1.3498 resistance. That extends the total RR to 1 to 2.8. What voids this setup? If price slices through 1.3375 and closes below on the 4-hour, the spring has failed, and I'm out. Patience is everything here. The sniper, conservative, entry, 1.3405, 1H close above after false break below 1.3400, stop loss, 1.3375 take profit 1, 1.3450 take profit 2, 1.3495 risk, reward, 1:2.8 are invalidation, void if 4H close below 1.3375 strategy 2, the active trader, standard. This one plays the momentum and the mean reversion off the bearish trend. The entry trigger is a pullback to the 1.3445 area. That's right at the 5-hour MA10 resistance and the prior intraday breakdown point. You wait for a 15-minute bearish engulfing candle or a rejection wick with a volume spike. Short on that candle close. Stop loss is tight at 1.3475, above the 1.3476 resistance and the 50-day moving average. The logic is simple. If they reclaim that zone, the sellers have lost control. Take profit 1 is 1.3405, just above the day's danger zone, giving you a solid 1 to 1.5 AR. At that point, move your stop to break even. Take profit 2 is 1.3388, targeting the 200-day and weekly anchor. The trailing stop rule. Once TP1 is hit, trail the stop by 15 pips on the 15-minute chart, locking in profit as price seeks liquidity below. This setup respects the dominant strong sell trend and capitalizes on the rubber band snap of intraday overextensions. It fails only if dollar momentum suddenly dies or if we see a surprise BOE headline that spikes the pound above 1.3475. The active trader, standard, entry, 1.3445, 15 minutes bearish engulfing close, stop loss, 1.3475 take profit 1, 1.3405 take profit 2, 1.3388 trailing stop after TP1, 15 pips. On 15 minutes chart invalidation. Void if 1H close above 1.3476. Type your pound sterling to US dollar range for tomorrow in the comments now. Give me a high and a low. Let's see who's aligned with the actual liquidity strategy. 3. The aggressor, high risk. This is a momentum chase for traders who can lose small and manage risk aggressively. With the 1-hour and 5-hour trends deep in strong sell territory, we look for a 5-minute close below 1.3402. Confirming the breakdown with a sudden spike in volume. Entry is an immediate short at market on that close, anticipating an acceleration stop run. Stop loss is razor thin, 1.3420, just above the broken support that now becomes resistance. The rationale is that if price snaps back above 1.3420 instantly, it's a failed breakdown and you're out for a tiny loss. Take profit 1 is 1.3385. Capturing the 200-day wash. That's a quick 1 to 1.7 AR. Take profit 2 is 1.3355, an area of prior liquidity from 2 weeks ago. This is a pure structural break play. You are betting that the stops below 1.3402 are massive and the move will be sharp. Warning: if the breakdown is a head fake and the dollar reverses suddenly, you'll be trapped. This is only for those comfortable with a high win rate approach that risks sudden wipeouts. Never size this one aggressively. The aggressor, high risk, entry. Market short on 5-minute close below 1.3402. Stop loss, 1.3420. Take profit 1, 1.3385. Take profit 2, 1.3355. Risk, reward, 1:2.2 R, to TP1, invalidation. Void if 15-minute close reclaims 1. 3420. Risk management pulse. Never risk more than 1 to 2% per trade. No positions through high-impact news. Stops are non-negotiable. This is how you survive to trade the next big move. If you remember only one thing from today's breakdown, let it be this. The single most critical level for the next session is 1.3402. A daily close below that turns the monthly buyer's trap into a nightmare, and the short side becomes the only path of least resistance. If we hold, we likely grind sideways, burning premium, before a larger move next week. Tomorrow's wildcard is simple. If oil spikes another 2%, or if we get a weak US services print, the volatility in cable doubles. I'll be dissecting the fixed income flows and the net long positioning on the pound that's sitting right near extreme levels. If you want the full breakdown on Bitcoin and the S&P divergence right now, that video is live. Tap the end screen. I take the same scalpel to every major asset. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one before the next explosion.